Good afternoon and welcome to the fourth in our series of international trade webcasts. I'm Ian Forsyth and today I'll be talking to Carol Harvey, who's an export finance advisor with UK Export Finance. But for those of you who have been with us before, bear with me for a second because I need to take our new people through the fact that what we're really looking for is for your questions. We've got some questions prepared already to run through with Carol on this interesting subject. But we also want your questions, and you'll see on the right hand side of the video window that you're watching me in at the moment, there's a discussion box. To get the questions through to us, all you have to do, type your question in the little chat box at the bottom, hit enter, and they'll come through to us here. What I would say to you is we do pretty much go on strictly a first come, first served basis, so if you want to get your questions answered by Carol as we go through the webcast, make sure you get in early or you might miss the chance. So please, we really want your questions. Make sure you get them in. As I said at the outset, we're going to be looking at export finance, and Carol has an extensive background, I think, in export finance. You started off in the public sector, you then moved to a private insurance company, and now you're back with UK Export. Can't even say it. That doesn't bode well for this afternoon. UK Export Finance. Some people might not be aware of the organisation you work for. Could you just give us a little bit of a feel for the background of the sorts of things that you do?
Sure, happy to. We are the UK's export credit agency, and we're one of the oldest in the world. We were established in 1919, just after the First World War, to help Britain recover from the ravages of that war. And I've been in existence ever since. And we work with companies, banks and overseas buyers to try and support UK exports and investments.
Right. So it's a government body essentially there to try and help businesses?
Ultimately it's the Treasury.
Right. Okay.
Basically it's Treasury funding, if you like, that is supporting these insurances and guarantees that we give.
Okay. Well, as we go through the rest of the webcast, I was about to say this morning, this is really turning into a bit of a nightmare for me. As we go through the rest of this afternoon, we'll find out a bit more about what it is that you do. But I've tended to start with the other webcasts with the almost the negative bit, the pitfalls, what are the things that people get wrong, because I think it's kind of useful just to get that out there at the start. In your experience from a finance point of view, what are the things that people get wrong?
Quite often they haven't planned or costed their exports. They think, oh great, I've got something I can sell, but they don't build in the cost of doing business. And therefore they can find that they're actually not operating and making any money. They might not research their customer enough. They might not research the country enough. Or they just may make things just more difficult. They don't understand the logistics.
Right.
And that can make it a very painful experience for someone exporting.
Right. And from a finance point of view, what tends to be the outcome of those oversights?
In the real negative, they could fail. But if they plan it right and work out the costs and speak to their bank or anybody that can provide finance, then they might be able to cost it out more clearly.
And even with smaller businesses, is it relatively straightforward
I
for
think
them?
finance is crucial regardless of your size. UK Export Finance is here to support all sizes of companies. So it's not just your big Rolls Royces and, and people like that, and Airbus and things like that. We are there to support all businesses. There will be certain limitations for some things, but generally that's what we're here for.
But essentially size isn't a barrier then?
Size isn't the barrier, and given that banks, for example, all have international trade divisions, so therefore they're geared to support business as well. You have your government bodies like Highlands and Islands, Scottish Development International, they're there to help guide businesses through the exporting minefield. You've got chambers of commerce, all there to try and help educate businesses.
Right, and you work closely with all
And we
those?
work with all of those organisations.
Right, and does that tend to be the main route into your services for most businesses? Do they come as referrals from Chamber or Highlands and Islands?
The majority of referrals come through banks and insurance brokers for the credit insurance side of things. There's nothing in it for the credit insurance broker other than credit insurance, but for the banks, very much working capital. And the route to those products are via the banks.
Right, okay. think sometimes when you talk about anything kind of financial, or it kind of maybe gives people a bit of blindness in terms of what are we talking about here. But before we went on air, we were discussing one or two of the cases that you'd been involved in, and some of them sounded really interesting. I think to give people maybe a bit of a flavour for the types of businesses you work with, tell us a bit more about some of the more unusual ones that you worked with.
Well, I'm not too sure how it's unusual, but for me it was more the product. There's a company that's based in Livingston, and it's out there in the public domain, so I can use their name, and it's a company called Click Netherfield. Now, Click Netherfield actually manufacture bespoke museum display cases, and you can actually find their products in the Smithsonian, for example. Anyway, they've been exporting for quite a few years, and they won an unusually large contract in Qatar. And they had never traded in particularly the Middle East, but it became very clear to them. It was for 367 museum cases. Now, these come from little tiny cabinets to the huge giant things that you'll see in museums. And so therefore they had this massive order, and it became clear that they were not going to have enough money to fund that contract. They would maybe have enough funding to get the first batch, but they'd no money to buy in supplies to manufacture the second batch. So they rightly approached their bank. Their bank in this instance was HSBC, and HSBC wanted to support this growing company, but there wasn't enough headroom in their existing facilities. So they approached UK Export Finance, and we actually provided a 50% guarantee to the bank to support that export contract. Now, what that allowed them to do was to not only fund that particular contract, because that's what that guarantee was about, they had enough headroom in their existing funding that allowed them to continue with existing contracts and seek new contracts. And so what that did was it gave Click Netherfield the opportunity to try and win more business in the Middle East, and indeed just grow their exports. Right.
But the big barrier for them was the fact that the size of the contract was going to give them cash flow.
They needed £1 million funding.
Right.
And it just wasn't totally available from the bank as much as they wanted to help them.
Right. And I think that one is interesting, because a lot of people think, oh, if I got a big contract, that would be great. And it's only afterwards that you suddenly start to think through the practicalities. Because I think you mentioned was it a small Aberdeen company as well?
Yeah, it's a different product. It's the bond support scheme that we have. This is a small sub-£1 million company that basically trades in oil and gas kit, piping mainly. And they have won an unusually large contract for them, probably about a third of their current turnover, from Tunisia. Quite sensibly, they negotiated payment up front.
Right.
So you think, great, that's it. But the customer, the buyer, wanted an advance payment guarantee. Now, given the contract is completely out of sync with their normal size of business, they approached the bank. The bank is only able to help them up to a certain point. Now, this one's tricky. It's still being considered because their balance sheet's a bit light. But I met with the exporter, I met with their bank, I've put together a case, and it's currently with our underwriters to see if we will guarantee up to 80% of the balance of the advance payment guarantee, so that he can release. At the moment, he's having to provide security to the bank.
Okay.
And so if we can do that, it will release working capital, and he can then go and look for his next export contract.
Right. Now that you mentioned something called an advance payment guarantee, which you're probably very familiar with. Some of our audience might be. Can you maybe explain how that works?
Some businesses, your method of payment for your goods or services can be quite varied. Clearly, if you can get your money up front, brilliant. You know, your goods haven't left the country and you've been paid. But for certain countries in particular, particularly Middle East, for example, and maybe even in the States, you have to provide a guarantee or a bond.
Right.
And that is really to protect the buyer in case you do not perform the contract. So they've given you all their cash and you haven't exported. So they would have the ability to call the bond, and the bank would have to pay the buyer back.
Okay, so obviously the bank wants to protect itself.
And the bank is protecting itself on that credit risk.
Okay, I think I get that now. I've learned something today, if nothing else. The other thing is, I mean, I think just to break down your services, we talked about a couple of good examples there, but when you go on your website and you look at some of the material that you've got out there, there essentially seems to be kind of almost like 5 products or 5 headings. So I think it would be useful for people if we went through them one at a time, just to get a little bit of a feel and a flavour for what they're all about and how they work. And the first heading on the publicity is about payment methods and risks. Can you tell us a wee bit about that?
Well, as I alluded to with that small Aberdeen company, there are many different ways to get paid. And some companies like this one will try and get their money up front. But that isn't always possible. And if you're a manufacturer, you may have a long lead time before you're able to start shipping. And therefore, you might need to negotiate say a 10% down payment, then there could be stage payments through the manufacturing process, and then there's going to be your payment terms post shipping. So you've got open account terms, obviously, which could be anything from 30 days to 180 days. That's probably the least secure term of payment you could have. There's no promissory note, there's nothing there guaranteeing that payment. You could secure those terms of payment with letters of credit, which is basically a bank risk, because the buyer's already had to set aside capital to honour that letter of credit. So you're securing it. It's basically securing the open account terms. But there's all sorts of different ways, and there's different lengths of credit that could be involved. And the biggest risk, of course, is not getting paid. But if you have an advance payment, the buyer might want a bond. If you're manufacturing something that is mechanical, they might want a performance bond, or they might want a warranty bond at the end of the contract to make sure that whatever you're installing works.
Right.
So there's different stages of when bond support is required from the banks, or where we might be asked to assist. On the payment terms, if the buyer, unless you do your research, you might not know if the buyer's creditworthy. So you've got your credit risk and you've got your political risk, which is the country risks.
Right. Okay, and I will talk about one of the case studies that's on your website again a little bit later on, that's very much about that political economy type risk. The second thing that it mentions on your site is the types of finance that's available, and it mentions specifically working capital in there. So tell us a bit more about that.
I would think it's fairly safe to say that no business can operate without working capital. We all need to be able to pay our bills and continue to do business. And some companies, if you can be a sizable company and be okay, you've got plenty of funding available through the bank. But for other businesses, for a variety of reasons, it could be the size of contract involved, or it could be you're just a smaller company and the funding facilities are tight. You might need more help, because let's say you have to provide bonds. The banks might ask you for security, so that could be cash cover. Where's the benefit? If you're having to give 100% cash cover for a bond, I don't see the cash benefit to you. So again, this is where the bond support scheme can release capital back. But companies can finance in different ways. They can invoice discount. So where you can do that with banks, and you can do it with actual invoice discounting companies. So basically you're selling your invoices and they'll pay you on production of the invoice and evidence of shipment a percentage of that invoice value, so that you'll get your money quicker. And then when you get paid from the buyer, you repay back the invoice financing. So you've got your general funding for your normal day-to-day business, but there are ways of actually financing the exports through invoices as well. Okay,
and how do you get involved in that kind of thing in terms of helping, or don't you? Is that very much a kind of private?
The private sector is very well geared for particularly for invoice discounting. All the major banks do it, and there are independent invoice discounters out there. Where we would come involved is whether it's more facility-led, and the facilities are tightening up, or there's just not enough headroom for you to take that next step in the export evolution, if you like. And you're needing more headroom.
Okay. So moving on to the next heading, if you like, was about trade finance, and it says here both pre and post shipment. Tell us about that one.
Again, giving you a manufacturing company as an example, if you are manufacturing, it depends on the length of manufacturing period. So you may require finance to fund the buying in of the supplies that help you manufacture your goods, right up to the point of export. That's your pre-shipment. So that's really what that is. Your post-shipment finance is exactly what it is. It's when you've exported your goods and you're waiting for payment.
Right.
But you're going to have other contracts that you're having to fund. You might be after new contracts, but the post-shipment finance is related to the post-shipment period. So what if you've given someone 120 days open account? It's a long time to wait for your money, and hardly anybody pays on time. You're guaranteed there'll be at least another 30 to 60 days before you get your money.
Right. And how do you help with that? What's your input there?
This is where the export working capital comes in, because what you're doing is you're helping to support fund a contract from the pre-shipment stage right through.
Okay.
And that's where, like Click Netherfield was an example, because they needed capital to manufacture, and they needed capital to fund the next batch of manufacturing once they've shipped the first batch of their goods.
Right.
So that's really where that kind of thing comes in.
Okay, so I was going right through the whole...
It's taking you
the
through
life
from the
cycle.
start to end of that particular contract.
Right. The next heading that's mentioned is credit insurance. Now, you've mentioned that already, but tell us a bit more about how credit insurance works.
Credit insurance, there's a vast private market out there to support business, and there are many specialist brokers that can support them as well. Some of the banks have their own credit insurance policies as well, which is where their invoice discounting comes in. But credit insurance is, in its simplest form, is there to protect you against non-payment. Now, depending on the policy you have, it could be for commercial risk, which is insolvency or default of a customer, or it could be political risk. So there could be currency controls put in place, war could break out, and the buyer has the inability to pay you. It's not that he doesn't want to pay you, he can't pay you.
Okay.
So for that kind of thing.
Right. So how do you go about actually insuring yourself? I mean, is that something that's relatively easy for any business to get?
It's easy to apply.
Right.
It's easy to apply. But maybe an insurance broker could be a route there.
Right.
We could signpost you to insurance brokers. You may, if you already use the services of a broker for your general insurances, first question is, ask them, do they have any credit insurance expertise? They're always the first person to ask. If they don't, you could contact us and we could signpost you to some insurance brokers that may be able to go around the market. If you go to a credit insurer directly, all you're going to get is their take on their product.
Right.
If you go to a broker, it's their responsibility to put a fair display of quotes in front of you.
Right.
It's different, it's difficult, it depends on what you want to do. A lot of companies just want to insure their bad risk. Underwriters are a bit like bookies, they like a spread of risk. And therefore, if it's too concentrated negatively, then it may be difficult for them to do it.
Right.
We, UK Export Finance, for export insurance, out with the European Union and the rich OECD countries, can provide support for single risk export insurance.
Right.
Places like Russia, for example, I've just recently given an indication to a Scottish company for a Russian contract because their private credit insurer is exiting that market.
Right.
We can't help you in France and things like that. I know we're
Right.
going to come up with another example,
Yeah.
so I'll leave that one
Yeah.
at the moment. But we can provide single risk insurance. We're not into the whole turnover market. That's not what we're about. We're not here to compete. We're there
Right.
to bridge a gap.
Okay. So if it's something that is difficult or not available from the private sector, that's where you're able to step
We
in.
may be able to assist, yeah.
Right. Okay. And the last one on our list was foreign exchange risks. So tell us a bit about that. I presume that's currencies going up and down from the start to the end. And
I have to admit, it's not something that I've seen much activity around
Right.
because, again, companies do a lot of hedging through their banks. And they may forward buy, but you can, in principle, insure the risk of foreign exchange fluctuations that could be to your detriment. But I have to be honest and say I haven't seen anything in recent times. But I would be able to find a man who could talk about it more than I can.
Right, so, but that's an area that, again, if somebody has concerns about, it might be something that you can help.
But we may well we refer them to their bank, and the bank, who will have an inbuilt expertise, should be able to guide them.
Okay, right. So that kind of gives us an idea of the sort of areas you're operating in, albeit that it depends what's available privately and what isn't. The actual services that UK Export Finance deliver is through a series of export finance advisors. Tell us a bit about that network. I mean, what kind of people, if I got in contact with UK Export Finance, what can I expect in terms of the sort of person that's going to come and see me?
A lot of the export finance advisors have only been recruited within the last 2 and a bit years. The aspiration is to try and increase UK exports by a significant amount, because we need to. We cannot rely on our domestic business to just solely get us out of the financial situation we're all in. And Europe is difficult, so we're having to look to push our exporters further. So it was decided that the UK government would invest in setting up a network of export finance advisors. Now, we all come from very varied backgrounds. Some worked for banks, some are accountants, people like me who is insurance broking, and we have brought a different, some have worked for Scottish Enterprise, for example, or SDI in the past, but have joined Export Finance. There are 3 of us in Scotland, and I'm one of the most recent recruits to them. But we're bringing in a kind of commercial reality, I suppose, because all our background is mainly commercial business. Yeah. So it's quite an interesting marriage, working with very much a civil service organisation, but who's desperate to modernise and get out there and support business. So and our role is to go out there, promote UK Export Finance, work with all the devolved nation bodies, like Highlands and Islands, for example, and try and increase that awareness about what we can and cannot do maybe for companies. Right.
So as the name implies, it's the whole of the UK, it's not a Scotland-only initiative, it's the whole country?
No, it's a UK-wide initiative, and there's been many billions of pounds set aside to support exporters.
Right, okay. At a general level, I think most people would accept that if you're going to get advice of any sort, in this case we're talking about export finance, but if you're going to get advice of any sort, it makes a bit of sense to do some preparation before you start talking to an advisor. What would you recommend to people in terms of, okay, they're going to see an advisor from UK Export Finance, what sorts of things should they think about and prepare in advance so that they can actually get the best out of that discussion?
That's actually quite a tricky one. I suppose the most obvious is you need to know what it is that you're actually looking for.
Right.
But I think that once you interact with the export finance advisor, our role is to try and learn as much as we can about the exporter's business. And maybe from those discussions, it brings out all sorts of things that maybe the exporter didn't think about, or maybe we didn't know about. And from that, we could maybe try and build up, is there a way that we can help support that company, or should we be signposting them to other organisations to help them because they may have come to us too soon? Right. But if they are an existing exporter and say they were having an issue with bond support from the bank, that's fine, we can talk to them, and with their agreement we could talk to their bank, and maybe we can open the door for the bank to come to UK Export Finance to provide the support that's required for that company. Right.
So it's be clear about what it is.
Have a good idea what you want. There's nothing worse than being vague, because you'll only get vague answers. But hopefully between us we'll get to the bottom of what it is that the exporter is looking for. If we can't help them, then, as I say, we'll signpost them.
Right. And I know you said, it maybe sounds really obvious, but sometimes it's the obvious things that people forget, isn't it?
Yeah, I had an inquiry from someone recently, a Glasgow-based company, and they were looking for it was as if they were looking for money to support Poland, doing business in Poland. It turns out actually it's investment money they were looking for.
Right.
But it wasn't something that we could necessarily help them with. They already have a premises in Poland. But what I did was put them in touch with their account manager at Scottish Enterprise.
Mm-hmm.
And SDI were running an event on investing in Poland. It just happened to coincide with the conversation.
Right.
Pointed him in that direction, and where he was going to be able to meet all the government officials from Poland, which might get him the entry to investment funding.
Right.
Reverse funding in a different way, because he was wanting to invest in Poland,
Right.
not Poland coming here.
Yeah.
But it was very vague initially to start off, and then it became clear as we were talking.
Right. I suppose we should get the question of fees out of the way, because people are probably sitting listening thinking, okay, there's all of this, but what's it going to cost me? Is there a fee attached to support from
the export insurance policy, yes, and that's individually priced depending on the risk involved, particularly political risk.
Right.
Because that's an insurance policy given direct to the exporter. But there's no minimum or maximum in export insurance, and our minimum premium's £250. So
Right.
It kind of balances itself out. But remember, we're only looking at fairly high risk markets, etc. So it could be pricey, but if the private market's not able to do it, and this is your only route to get protection, then it may be worth it. But if we gave you a quote, you might be able to build the cost of it into your export contract.
Right.
And it might pay for itself. The bond support and export working capital schemes are guarantees given to the bank. So exporters who have to provide bonds or have export working capital facilities have already pre-agreed, they've got fees with the bank.
Okay.
So if we give a guarantee, we take a proportion of the fee the bank is getting from the exporter. So we don't charge additionally. It doesn't mean we couldn't challenge a bank's fees, but we would only challenge a bank's fee if we thought there was market failure and they were really over-egging the percentages, for example.
Right.
It would be rare a bank would be charging you so low that we would have an issue, I would think. But no, there's no additional cost over and above that to the exporter. So it's whatever they'd already agreed to pay the bank.
Okay.
So if we gave an 80% guarantee, it would be 80% of the bank's fees.
Right. So they don't pay any extra. It's
No.
only on the
Yeah.
insurance side.
Yeah.
And as you said with insurance, it's like all insurance, it depends on the risk, doesn't it?
Exactly.
Right. Okay. One of the things, I suppose, when you look at exporting generally is people very often get caught up on the idea of it's a kind of box that you're saying, it's always product kind of based. But I know that you also provide support and assistance for services as well. Before we start looking at that, I think it would be very useful to take a look at one of the case study videos that's actually on your website, so people can go back and look at this again later. And it's a company who are essentially a kind of design practice. They're called BDP. And we're just going to go over and hear from their finance director, Heather Wells, about the support that their business had and what that's meant for them in terms of being able to break into new markets.
Hello, my name's Heather Wells and I'm the Group Finance Director here at BDP. We're a design practice comprising architects, engineers and urbanists. We were founded over 50 years ago in the northwest of England. We now have 6 studios throughout the UK and 5 studios overseas. About 5 years ago, we made a strategic decision to expand our international presence and profile. We found, especially in the Middle East, there was a requirement for performance guarantees that required cash and bank funding. At that time, the UK banks were finding it difficult to support export finance. We specifically approached UK export finance to assist our development plans and to encourage growth faster than otherwise would have been possible. After initial positive discussion in relation to Kuwait, we returned with a larger project on the basis that UK Export Finance knew more about us, knew more about our work, and had successfully been willing to support a services contract. If UK Export Finance hadn't existed, we would not have gone for a number of opportunities in the Middle East. 30% of our income last year came from outside the UK. Of this, 20% was from the rest of the world and only 10% from Europe. Without UK Export Finance, our cash restrictions would have limited us to one opportunity at a time. With the benefit of external support, we've been able to take numerous opportunities forward and therefore grow faster. Our creative skills and experience are highly sought overseas. Services are an important part of the UK export industry, and it is good to see UK Export Finance supporting services as well as goods. I would encourage everyone who is looking to grow their export business or begin to export to contact UK Export Finance and see what support is available from them.
So, as we heard from Heather there, clearly, assistance with exporting is something that applies to service businesses as well as businesses that are exporting products. Just before I go back to talk to Carol about that in a little bit more detail, just a reminder that we are almost 3/4, probably a little more than 3/4 of the way through the webcast today. If you do have any questions, we are running out of time fast, so make sure you get your questions into us and we'll try and make sure that Carol gets the opportunity to answer those for you. But just going back to that case study with BDP, one of the kind of recurring themes, apart from the fact that it's a service-based business, was the fact that the assistance from UK Export Finance was really all about helping them do more quickly. Is that one of the kind of key criteria for you in terms of how you support people?
I wouldn't call it a key criteria, but what I would say is what probably one of our aspirations are. This particular company was really keen to grow their business, but recognised that they couldn't grow as quickly. They would have to pace their export aspirations because of funding. And by utilising the support that UK Export Finance provided, it meant that they could not only take on that particular contract, it allowed them to continue on seeking new business. And also having touched our service, they also had the experience of it, which meant in future contracts, again, as the business grows, if they had more working capital requirement, they knew there was a route that they could go to through the bank. So it gave them a confidence to look for more business, basically.
Right. Now, I run the risk of you just giving me a straight yes or no answer here because it's one of these kind of closed questions, but is there any big differences between service-based and product-based businesses in terms of what kind of help you can give and your experience of working with them?
In some ways there isn't a lot of difference, but I think some of them, it could be the territories or the trade sector that you're in that could determine it. As you saw from that video, I mean, this was an architectural design business, so that's quite very service driven. But if you look at the oil and gas sector, for example, that's a broad sector. They are not just supplying kit, turbines or whatever it is, or Christmas trees and things like that. They're actually providing men on site. They're doing installation, they're doing commissioning. They might even be running a power plant, for example. That is a service. The uniqueness between some services and the supply of goods could be their terms of payment.
Right.
It could be more complicated to, say, for example, obtain a letter of credit for services, just because the nature of the beast. You're putting worksheets in, they have to be signed off and accepted, then an invoice would get raised, and trying to work a letter of credit in something like that could be quite awkward. Whereas if it's a car, you've got something more tangible, and you say, right, okay, it's capital goods, and therefore it's easier to do it. So services are more unique in that way, but other than that, they have just the same complications as a manufacturer would have, or somebody just sending you a box of biscuits, if you like.
Right.
No, not too complicated, but more terms of payment.
Right. But I think the key message is it doesn't really matter whether it's a service or a product. There's help.
You still run all the risks that any exporter would have.
Okay. Going back to export insurance policies, which we kind of touched on. One of the things I was saying again before we went on air was the fact that when you look on your website, there's quite a few really interesting case studies that kind of bring things to life. One of them around insurance was a company called GR Lane, and they do, I think it's herbal remedies and an export to Greece. Now, the situation they found themselves in was that the private insurance broker basically saw the economy in Greece and thought, that's a bit risky for us, we're out of here. But you were able to help with that. Can you tell us a bit more how, if someone's
Yeah.
confronted with
Yeah.
that situation?
Just a small thing. It wouldn't be the broker, it would be the credit insurance
Insurance, yes.
underwriter, okay, that make those
I
decisions.
just can't read properly. It actually says insurer here, but I changed it to broker.
But as I'd said before, we're not allowed to underwrite credit insurance policies within the European Union or the rich OECD countries. The only exception is Greece, and we were given special dispensation. So when their credit insurer exited Greece, for probably some very obvious reasons, we had special dispensation and were able to underwrite the credit limit for that company. So that was quite unique, but without that, it would have made it more difficult for them because they would have had the difficult choice to make. Do we continue to do this and take all the risk against non-payment? Or do we potentially also lose the contract by demanding advance payment or looking for security, which was probably going to be nigh impossible with the Greek banking situation. And so, as I say, we were able to, in that situation, help that company. And we have done several export credit insurance policies for companies in Greece. That special dispensation runs out at the end of June. We don't know if it will be extended, but these are EU regulations that we have to comply with.
Right.
But yes, I mean, that would have given him a dilemma. It was a long-standing customer.
Right, right. But I suppose the wider issue there is we never quite know what could happen in any given market.
No, we don't. But if at the moment the credit insurers are exiting Russia,
Right.
So we are seeing a large influx in applications on Russia. We are equally seeing large influx of applications on Iraq.
Right.
We've done a number of export insurance policies for fish companies, Scottish fish companies, for Ukraine.
Right, right.
So
All of that because of
because
things
the
that are
private
going on.
market has the risk appetite just isn't there.
Right, okay. And that's with the insurers, not the brokers. See, I've got it now. I've got it sus now. One of the other case studies on the website, I really would recommend people have a wee look at them because I think it brings it to life, but it's about a company called Edutech. And they won a contract in Eritrea. And with that one, you worked with the bank to help fund some kind of bond for that. Can you tell us a bit more about that?
Yeah, Edutech's an interesting company. They provide training materials and educational equipment and again export quite broadly. But this was a particularly large contract in Eritrea. So right away they had to think about it. They had to structure the contract so that they had enough sufficient capital to allow them to do the pre-shipment side of things and then wait for payments. So part of the terms of payment was they asked for a 10% down payment. And then, yes, they did. And there was also a performance bond involved. So clearly they were going to supply goods over a period of time, and the customer wanted to be sure that Edutech will fulfil their part of the contract, so
Right.
not just the payment side. So they also asked for a performance bond. And again, we supported the bank in providing the performance bonds required for those contracts. And what that did for them was it was quite a large contract, and I think that one, it allowed them to over the next couple of years I think they nearly tripled their export turnover, because it gave them the confidence to go out and seek those type of contracts.
Right.
And the knowledge that the bank would be willing to help them with the backing from UK Export Finance.
And I know we've touched on this before, but just to reiterate and make sure that we're absolutely clear here, there are no kind of categories or exclusions. It doesn't matter what sector you're in. It doesn't matter what size of business you're in. Potentially you could support any business?
Yeah, essentially you have to be a UK-based exporter. The minimum UK content in your contract has to be 20%. And there obviously has to be an overseas contract. So that's pretty much it. We don't have minimums and maximums. It does get more complicated for the export working capital, and we don't have the time to go into detail, but
Sure.
our website would certainly go into the detail of what's eligible and what all the criteria is. But no, and sector-wise, it really doesn't actually, unless you're in something like Uber Defence or something where it might take a different requirement, but we're not talking about the mass out there who are doing business, as usual.
Right, but in general terms, it's pretty much open to anyone. It's all about, I suppose, there is detail, but as long as you can meet that detail, we're okay.
Yep. And if we think that you're borderline, the export finance advisor's role is to help try and build a case so that the underwriter will give a serious consideration for your support. So if your turnover, for example, is below 2 million, and if you've maybe been trading less than 3 years, we will try and build up a case with you.
Right.
To try and see if the underwriters will support it, because we don't make the decision, the underwriter makes the decision.
And I think that's an important point, that just because you're a government body, people shouldn't see the advisor as being someone who's going to check that everything's okay. You're actually there to help them.
Absolutely.
Right. We're getting very close to running out of time. So just a final question, Carol. If there was one key bit of advice that you'd give to any exporter, whether they're experienced or whether they're new, based on your extensive experience of working across all sorts of different types of businesses, what would that bit of advice be?
Do your homework. Very much do your homework. Know your own product. Have a strategy, have a plan. Make sure you've got links with your bank, links with Highlands and Islands Enterprise, that you use all the support that's out there, the Chambers of Commerce, because regardless of what stage you're at, but if you're new to exporting, Highlands and Islands Enterprise and the Chambers of Commerce in particular are very good at supporting companies and educating them towards the stages of export. The banks are there, they already have the knowledge and expertise, so they're there to help support companies to break into that market. You have the credit insurance market out there that's there to try and help companies protect themselves when they go into exporting. So obviously there's UK Export Finance, and people like myself are there to try and also help, but we will guide you and signpost you to people if we ourselves can't actually help you. But yeah, your homework is absolutely critical. There's no point in thinking, oh, I've got a great product, but not recognise how much will it cost you to do business. How do I sell in that country? Do I know their culture? What are the export restrictions? Are there export licenses required? Are there import licenses required? There's so much that companies have to consider, but if you've got an account manager in particular, say with the likes of Highlands and Islands Enterprise, then naturally they would hopefully help you. If they can't, I'm absolutely sure they would also signpost you to somebody who can. Right.
And again, before we went on air, you had an interesting example more about, talking to existing customers and stuff.
Yeah, one other thing you could consider if you've not exported before is if you're supplying a UK company that exports, why not buddy up? Why not contact that person? You already have a business relationship. They've already broke the barriers of exporting. I'm quite sure they'd be quite happy to talk to you because everybody loves talking about their own business. And they might be able to give you pointers. Or say they already have an overseas operation. Could you start supplying their overseas operation? Could that be your footstep into the market? Could you partner with them?
Right. So don't overlook your existing network.
Absolutely. Because they'll be a minefield of knowledge.
Yeah. Well, we have run out of time. I did say it would go quickly. It's been really good having you with us. I think for anyone who had never come across UK Export Finance before, you've shone a light on what they do. So that's useful. That's been a big part of what we were trying to achieve today. This is the second last in the series of webcasts from Highlands and Islands Enterprise looking at international trade. Next week, and I do need to double check the date, it's the 31st of March. We'll be back at the usual time of 12 o'clock when we'll be speaking to Ewan Ramsey. And this time we'll be looking at export documentation. That's the final one in the series. So that's on the 31st of March at 12 o'clock, export documentation. One of these areas, maybe not sound wildly exciting, but it's also one of these areas that if you get it wrong, you can tie yourself in knots and be paying the price for years afterwards. So really important. Export documentation with Ewan Ramsey. next week on the 31st of March. But before I go, a couple of reminders. You'll be able to find the link to the Smart Exporter page the Highlands and Islands Enterprise have set up. You can either book on to that final webcast that I mentioned, or you can find out about a whole range of other support that's available through Smart Exporter. So click on the link below the video window. And if I could just ask you, just make a plea for you to complete the short survey that's below us as well. I keep pointing down there because it's just underneath us. So if you just scroll down the page, you'll see a link to a survey. HIE, Highlands and Islands Enterprise, are looking to try and get as much information from you as they can to try and inform what they do next and what support they offer to people. So this is your opportunity to have a little bit of an input into that process. So we can ask you to complete the survey. So I really hope you'll be able to join us next week on the 31st at 12 o'clock. Export documentation. We'll see you then, and thanks for being with us today.